Okay, let's look at round three results and help get you prepared for round four. So you can see the net profits per team have been going up. We have a nice upward trend. This is our new leader in profits, One Steps Auto, followed by Pavo Real. So, and we have a number of teams though who have who have got $90 million in net profits or higher, which is great. This is what you're in business for, to generate net profits. If we look at points per team, we could see that points in round three overall have improved for most teams, and we're halfway through the simulation, so hopefully you've accumulated about half the points needed to get the A in this project. And a lot of teams where I'm happy to say this is the first round where I don't have any teams with negative points. We have all teams making points this round and doing pretty well, and most teams beating this is the 400 mark. We have most teams beating that 400 mark goal to get to that 2,500 points. All right. Now, if we look at stock price, we can see that we have these two companies, BW Autos and K Autos, are tops in stock price. How did they do it? They increased profits. They reduced the amount of outstanding shares. We have this team has the biggest change and improvement in profits this round, which is great. But by and large, all teams have improved their profits, which helps improve their stock price. So all team stock prices have improved, which I would expect in an industry that's going up 20 to 30% in sales every year. And the way to get your stock price higher, of course, is to increase your earnings per share, which means you've increased your net profits. That's what stock investors are looking for. If we look at sales per team, and again, we have a new, actually this is the same, J Automotive have kept number one in sales for the last 2 years. We have a couple of teams that really shot up in sales from last round to this round, which means they really perfected their forecasting method. They've watched my videos, reviewed the online student manual, and really stepped up their forecasting to get top sales, which includes the designing of attractive cars and proper advertising. Now, earnings per share, we can see we have a new leader in earnings per share. So One Step Auto did very well. This company emailed me for advice. I said, listen, I don't give personalized advice on individual teams because I think that's unfair for the entire class. But what I do is I create these videos to review and give hints and help the entire class do better. Watch those videos. So they wrote back saying, yeah, I was blowing off your videos. I didn't think they were really worth it, but I watched them. They were valuable, and I made some inputs that I think is going to really help. And you know what? I wrote back to them today, and I said, yep, it really helped. You really did a lot better this round. I'm glad that my videos helped and that you were able to put some more effort into the simulation. And we see that we have, there are a couple of teams here that are doing very well in earnings per share. And earnings per share is what drives stock price. So there's only one team that declined in earnings per share here, and that team should really reevaluate their profit margins and how they're putting, actually two teams that declined in earnings per share. So that's a real question mark. Why is that happening? Should never happen in an industry that is so growing so quickly. So let's look at the leaderboard here. So in round three, One Steps Auto had 800 points. Congratulations. Did better than 99% of other teams that I think it's either 5,000 or 12,000 teams who've played this in the last couple of years. So I have 4 teams in the top 90%, above 95 percentile in performance and current round points. And then the number of teams above 50 percentile. So class is doing pretty well. The teams below that really need to evaluate, what am I doing wrong? Why is my points not really matching the norms of people who play the simulation and the class? Now, gross profit margin, everybody who's at 45% and higher is doing pretty well in gross profit margins. By round 4, you definitely have to have your profit margins in the 50 percentile range, if not the 60 percentile range. Now, the teams here, now remember, you started this simulation in year 1, and the company had a 40% profit margin with bad management. You took over, and so far, this is the best you could do. Only 4 percentage points, 3. This one actually went back down 1%, -1, -2, -7 percentage points. So if you're going down in gross profit percentages, investors hate that. You're not going to get rewarded in points. You're not going to get rewarded in earnings per share. You're not going to get rewarded in stock price. So you really have to reevaluate what you're doing here. And how do you get your gross profit margins higher? You increase prices and reduce costs, or one or the other, or both, hopefully both. How do you increase prices? You just go on the sales page and put a higher sales price. How do you reduce costs? You buy operational investments to help get a cost reduction. You put lower features on your car. Might make your car a little less attractive, but it's better to sell a product at a profit than at a loss or a small profit margin. So you really have to really balance that trade-off. Now, stock prices, we have a nice range between $16 to $49. And again, how does your stock price go up? Same way in the real world. Investors admire revenue growth, profit growth, earnings per share growth, profit margin increases. That's what drives the stock prices higher. Okay. Also, in the stock price, if you buy back stock, fewer outstanding shares will also increase your stock price. And that happens. Stock buybacks are very common in the real world. Okay, return to equity looks at your percentage return, your profits related to your net profits related to your equity, or the size of your equity. So your company is made up of two components, liabilities and equity. Equity is the amount of money your investors brought into the company. So this is showing their return for the money they put into the company. Basic accounting, financial management concept. So if you've taken finance and financial accounting, you should understand these ratios. They should be covered in both those classes. Okay, so if we look at total points, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 teams who've already met their goal of over 1,200 points, the halfway mark. They're on track to earn an A. They've got all their required points and then some. Now, the teams below this, you are behind. So you really need to put the effort in to see how can they improve. And I've seen plenty of teams at the halfway mark at 500 and lower points be able to get that 2,500 points by putting, the effort into the simulation that this project deserves, which may require doing more practice rounds, watching my videos, reading the student user guide, really thinking and putting some effort, applying the concepts that you've learned in your coursework into this simulation. Okay, operating profit margins. How do you improve your operating profit margins? The one big variable that you can really work on in the operational side is your advertising. So if we look at the marketing charts, you can see how much advertising. Are you over advertising? If you're advertising too much, you may be selling all your cars, and the other demand is going to other teams anyway. So if you're over advertising, you're definitely wasting a lot of money and making your operational profits less efficient. So you want to look at how you're marketing your vehicle compared to your competitors, and then you can also check the industry page to see how the market demand is being reflected in the amount of advertising. So does this much advertising result in much more demand than the average group of advertising? This is all research and strategy that you have to put together when you're when you're looking at the simulation. Okay, and that will help. Having a better, more focused, more efficient advertising dollars spent will help your operating profit margins. Earnings per share, again, is a factor of net profit margins and your outstanding shares. So increase your price, lower your costs, reduce your outstanding shares, your earnings per share will go up. Return on assets, look at their net profits to assets. So if you have a lot of assets that aren't producing profits, you're going to have a low return on assets. So don't buy extra production plants. Try not to have leftover unsold inventory. These are things that hurt your score on return on assets. You have bloated assets not producing a profit, and that's going to reduce your score. So assets have to be efficient, and having unsold inventory really increases your assets, makes them inefficient, or having unused production plants. Net profit margin, of course, is the after interest and taxes. You can't really control taxes because it's the same for every company, but interest, you can control interest by buying down, retiring some of your debt. Sales, revenue per share, of course, better forecasting here and better meeting your forecast with production. And total asset turnover is how you're transitioning your assets into sales. So it's sales divided by assets, and you should be around 2. So if your total asset score is below 2, you have too many assets, not enough sales. So you have to look into making your assets more efficient. How do you do that? Higher capacity utilization, less unsold inventory. Okay, so if I go into my demo, so I'm just going to go into my demo. I'm in round 4, which you're going to be working on. So I'm sort of a round ahead of you. First thing, again, as I start, I review my, oh, actually, you're in round 4 also because you completed 3. So we're at the same page here. So what I would do as a team, I'd look at my overview. How is my profit margins? Okay, I went up from 45 to 55%, and I went up from 24 to 37 because I did more advertising analysis, and my net profit margins followed through because I bought and paid down some debt. And so there, but my total asset turnover was reduced because I bought a lot of assets. My capacity utilization wasn't as high. And my forecasting, my forecasting was low? So it must be that my poor score on return on assets and total asset turnover has to be due to unsold inventory. And I had a lot of unsold inventory here. And that's what really bloated my assets up and reduced my return on it. Return on assets should have been much higher, but it was lower because I had a lot of assets, and my total asset turnover was reduced because I had all these unused cars, and those are inventory, and those are assets that are not generating sales, so my assets are bigger, growing faster than my sales. My forecasts were weak, so I over forecasted and didn't sell all the cars I forecasted, so I took a hit on my forecasting, and I had an unexpected deficit because I had all this unsold inventory that I wasn't able to sell and translate into profits, which translate into cash. I had this unexpected deficit. So what I'm going to do is I'm going to review my assessment, get some ideas on how to improve each of my ratios. I'm going to review my charts, and I can tell, in my performance chart, I'm going to see right away that I've met all of my market potential because I overproduced my cars. And it's good to sell all the cars that the demand is there for, but I overdid it, and that has a lagging effect on my assets and my profits for the company because of this leftover assets. I'm going to check out my industry page to see what my competitors are doing. How did they build their car? What was their market potential? How much did they spend in advertising compared to me? And really do a comparison of how I'm stacking up to other teams that are performing better. My financials are backed up here, which are something I could, if you're a financially oriented person, you can use these to help notice trends or year-over-year changes in your income statement and balance sheet and cash flows. And I go back to my sales page, and I see that I have a nice operational cost reduction. So when I build my cars, I left off at a profit margin of 55%, and I'm building a car at 41%. So I have to listen to Professor Nugent, and I already have the highest price possible, and prices are going up, but I'm going to have to go over and reduce some of my reduce some of my characteristics to get my profit margin higher. So now I'm building cars that are not going to be as attractive, but that's something I'm going to have to do to get my profit margins higher, and I want them above 55% is what I'm looking to do. And so areas where I can do that, I might have to disappoint in the build of the car a little bit, but it's important to get these. And the reason is I need to make more operational cost reductions to get, I can even increase my price here, but that's going to help to get my profit margins higher. So this one looks good. Okay, so I'm going to finish. And then on my marketing page, I'm going to see, okay, here's what is being expected to be spent, an average range. I'm also going to check out that I'm going to go into the advertising chart and see what the advertising is per company to get a better handle on that. So this is going to take a while, so I'm going to pause the video and then come back to production. Okay, so in production, I see that I need to buy one production plant here. I'm good on the other production plants. I don't really have to buy many production plants because I know I have a lot of unused inventory. So I'm helping that to balance my forecast, and I'm forecasting a little bit lower to help better meet my goals of my forecast. And then I'm going to have to make some additional investments in my operational investments to help to reduce I want to reduce the amount of cost for next round. So I'm going to make some investments here to get this investments up here. And then I go to my finance page. And once I'm in my finance page, I have to look to see I still have a nice surplus. So I have some room to buy back some debt, long-term and short-term, and also buy back some stock. So now have a nice, I like to keep at least 22 million in my surplus just in case, because that deficit really loses me. Instead of earning 100 points, I lose 100 points on the overview. So that's a 200-point swing. So I want to make sure that doesn't happen again. So let me complete my round 4. And okay, so I'm in round 5 now. And I made 482 points, which is fantastic. I got my profit margins up. My operational was reduced a little bit because I may have over-advertised. I got to check into that. And that bled into my reduction in my net profit. But overall, my forecasting was better. I had a surplus like I expected. So I'm very happy with the results here. And again, this is a demo where I'm competing against computer players. The practice rounds or the demo, my demo, which is my practice, isn't the same as competing in a graduate level industry with a bunch of other smart students. So you're not going to exactly see your results duplicated in the practice rounds that you'll see in a team competition, but hopefully you can still learn something and come close. So I hope this video was helpful in giving you hints and insights on how to do better in the simulation and to get that full grade. I'm really hoping everybody can get the full grade in this project. And that's why I'm making these videos, to review every round and give a lot of hints. But I can tell from the view count, not everybody is watching these videos. And that's, if you're one of the teams watching these videos, you have a real leg up in performing better in the simulation. So I wish you the best of luck in round 4. And also keep in mind, whatever entries I made in my practice game in round 4, don't duplicate or copy what I did, because we're in completely different competitions. So you really have to go by redesigning the vehicle based on what you think is best for your strategy and the teams you're competing against. Okay, thank you and take care.